Well, hello everyone, and welcome to Moementum Channel. Today we're going to be talking about the one dividend stock which has 20% plus growth upside. It is an undervalued stock that is perfect for dividend investors to buy or watch right now in the stock market. This company is no other than Merck, which is in healthcare sector. It's a healthcare pharmaceutical company. Merck can trace its history back over 350 years to a small town in Germany where Friedrich Merck purchased a pharmacy back in 1668. And in the centuries that followed, Merck has expanded to America and evolved to focus primarily on branded drugs, an industry with high barriers to entry and an excellent profitability. Merck does pay a dividend, which has an annual yield of 3.64%, and it has a dividend safety score of 99, making it a very safe dividend payer. The last time that Merck increased its dividend was in November of 2021, whereby they increased it by 6.2%. Merck has a market capitalization of $192 billion, making it a mega cap company. And the last trading price for this stock was at $75.84. Merck and its stock has a very low volatility. That is decided based on the beta, which you notice the beta score for Merck is only at 0.2. Typically, a beta of 1 suggests that the stock has similar type of volatility as the overall stock market. In this case, the fact that the beta for Merck is very lower, only about 20% that of the beta of 1, suggests much less volatility overall in the stock price for Merck. You'd also notice from the insights based on some of the trends at the bottom from Morningstar that for the company Merck, their price to book ratio is at 5.36 multiple, and their price to sales ratio is only at 3.96. In other words, the shares of Merck are traded at close to 4 times their sales estimates. With that, let us move on and take a look at additional metrics related to their dividends. The payout ratio for Merck currently is at 41%, and their forward payout ratio is even lower at only 38%. Both of these figures are considered to be low for majority of companies and suggest that the company has a ton of room for it to increase its dividend for many, many years to come based on their current payout ratio. In terms of the history of their dividend, Merck has been paying its dividend uninterrupted for the past 31 years. And if you notice, in the past 10 years of those several years, they've actually increased their dividend year after year. So they've been increasing it in the past 10 years. Merck does pay its dividend on a quarterly basis, and it's paid in the months of January, April, July, and October. And the current annual payout for shares of Merck is $2.76 per share. In terms of valuation, Merck's current dividend yield of 3.64% is 21% above their own 5-year average of 3.02, indicating that the stock may be undervalued unless you believe that the company's outlook has weakened. It is also worth mentioning that Merck's forward price to earnings ratio of 10.5 is well below their 5-year average of 14.6. And of course, it's even less than that of the healthcare sector at 17.8. When the price to earnings ratio is unusually low, it could suggest that perhaps investors have become pessimistic about the prospects for the growth. But that's why we're going to take a look at the company's specifics in terms of additional financial metrics and their financial measures to assess that and see how those looking in terms of the fundamentals. I would like to also bring to your attention that the 52-week price for the stock is between $71.68 all the way to $90.54. And the last trading price for the stock is hovering quite closer to its 52-week low price. So definitely the stock has lost some of its mojo in the past, over the past 1 year, and now it's trading closer to its lower range of that price. So keep that in mind. Let us take a look at financial metrics, which are quite promising, I can tell you, before we dive into them. Let's look at the earnings per share first. And adjusted earnings are usually used to exclude any noisy one-time events, such as non-cash impairment charges. And in this case, ideally, you'd like to see companies that have their earnings per share steadily and nicely grow. In this case, in the past 10 years, you notice since 2012, there was a little bit of that decline back in 2013 and 14. But since then, the company has recovered and increased its earnings per share. With the last 12 months, they showing $6.26 earnings per share, and with the next 12 months expected to have $7.24. That's actually quite decent, showing a growth of 16% for the next 12 months in terms of the EPS. The other aspect that in terms of financial measures that we'd like to look at is the total sales or total revenue for the company, and that's shown on the far right. Here, again, in the past 10 years, you notice that in 2019, the company reported 46.8 billion in revenue, increased it in 2020 to 48 billion. 2021, they increased it even further to have the highest total sales in the past 10 years. And in the last 12 months, all in all, they are still showing $48.7 billion in total sales, which is, again, decent and remarkable. As for outstanding share, ideally, we'd like to see this number declining over time. This way, the company adds and kind of gives back more value to shareholders in a sense. And what is noticeable here that you are seeing that kind of downward trend since 2012, whereby they had 3.08 billion, and in the last 12 months they are showing 2.54 billion. Definitely that downward trend is obvious and clear there. Return on equity is the final measure that we're going to take a look at. It measures how many dollars of profit a company earns for every dollar that shareholders have invested. And for the companies, generally speaking, we would like to see return on equity above 10%. For the most part, in the past several years, that has been the case, and this standard has been met with the 2021 and also last 12 months, the company showing a 40% return on equity, which is way better than that of the 10%. I'm gonna also show you here what are some of the estimates on in terms of revenue for the years to come for the fiscal year ending in December of 2022, as well as that of ending the following year in the end of December 2023. This is based on analysts and estimates on 𝗖𝐋𝐈𝐖𝐊. With the year 2022, the total revenue estimated to be close to $57 billion plus, and in the year 2023, it's estimated to be $55.57 billion. Although 2023 is going to be slowing down a little bit based on these estimates, it is still much higher than any of the past 4 or 5 years that have been showcased here on the screen as well. So definitely the prospects in the future based on these analysts and the estimates are promising, showing increase in the revenue of the company. Let us take a look at the stock return in the past several time frames. The graph on the left side shows you the stock return in the past 1 year, and the graph on the right shows you the stock return in the past 5 years. This does not take into account your distributions or dividends that you've collected. It's purely based on the stock price. In the past 1 year, the stock was up by 6.67%. This past year refers to 1 year from today's date that the video was made. As you notice, the closing date was for February 23rd. And the past 5 year, the stock was up by 20.2%. Decent returns for a remarkable dividend paying company that has been paying its dividend for over 30 years and has been increasing it for the past 10 years, as we alluded to earlier. Next, we're going to take a look at price targets. Analysts on Yahoo Finance have a price target of $92.58. These analysts, according to their expectation for 1 year price target, that shows close to 22% price upside for Merck company. Analysts on TipRanks, 15 of them have a coverage of the stock, 9 of them give the stock a buy rating, 6 of them give the stock a hold rating, resulting in overall moderate buy. With analysts on TipRanks giving the stock an average purchase price target of $89.86. And here, if that holds true, that shows an upside of close to 18.5%. Lastly, if we look at the analysts on Simply Wall Street, where they analyze the stock from a fair valuation perspective, they assess the fair value of Merck stock to be at $239.90, suggesting that this stock, based on their calculation on intrinsic values, is undervalued by close to 68 percent. Well, there you have it, folks. A quick look into one high quality dividend paying stock that has been paying its dividend for over 30 years and has shown the potential for an upside of over 20%. Let me know if you are currently invested in Merck or any other pharmaceutical company. Would love to hear from you. So be sure to leave us a comment down below and share that with us. If you enjoyed this video, don't forget to give this video a thumbs up and share it with someone else who might benefit from the video. And of course, subscribe to our channel. Here on Moementum Finance, we post every week several videos about investing, finances, as well as ways to reach financial freedom. Thank you, and we hope to see you next time.